Welcome back and good evening, everyone. So, welcome to our live sharing session for today. Here, we're going to continue to share some related knowledge about the stock investment and the financial concepts, hoping to inspire and help everyone along the way. So, everyone, we have now entered the second phase of competing for the Asia Pacific Regional Headquarters. Of course, we are still in the early stages of this second phase, but it is undeniable that we will enter a new profit phase next. The speed of profit will also greatly accelerate. I will continue to introduce specific plans for you in advance. And at the same time, we are proceeding in an orderly manner. Like today, more new members have joined the ranks of buying block deals. And recently, I have been in talks with other cooperative institutions. I can tell you that there will be more and more profitable opportunities coming up next. And at the same time, we are systematically resolving the issue of scarce shares when purchasing these block deals. Our recent goal is to allow all members who join and support us to achieve their respective profit goals in about 2 months. I'm not going to keep diving in about the profitability. Just follow our profit plan closely. Wait and see. Okay, so next we're going to be going over the contents that we will share with everyone this evening. Regarding the wealth growth plan, we are about to enter a comprehensive phase since our company has already started entering the Indian market comprehensively. Now, we need more support from our friends that join us, as well as our members. Only in this way can we effectively expand our market share in India. We have the possibility of becoming the number one in the Indian market in our industry in the future. Of course, many new people here have joined us recently. And even some old members are not very clear about what's going on or what we'll be going to do in the Indian market. So why are we doing this? Some people even have doubts in their minds. So tonight, I'm going to provide further sharing and introduction to you all. Only when all of us work together can we ensure that we have a very high execution power. This is also to ensure that everyone can smoothly earn profits in the process. Our company can also strive to become the number one in the Indian market in our industry. So tonight I'm going to introduce to everyone a living legend in the international financial markets, known as the king of speculation. That's going to be Soros, so George Soros. In fact, in today's financial world, Soros is regarded as a master alongside of Warren Buffett. We need to look and learn more from these masters that we see and learn what is different about them from ordinary people and what is worth learning. So we kind of have to pick and choose what we're going to be learning from them. So without any further delay, we're going to continue to share tonight's content. In the upcoming lesson, if you have any questions or doubts, please feel free to ask anytime after our live sharing session ends, and I'll do my best to answer everybody. So I hope today's sharing can bring us all new gains and inspiration. So let's continue. So we always start off with our market analysis. So let's take a look at the Indian indices for today. So the domestic market have opened in a mixed environment. Ultimately, the benchmark data in India have all moved up. So finally, we're moving up. So let's directly take a look at the performance of the two major indices of the Indian stock market. Now, they both closed higher, marking the third consecutive trading day of gains. Looking at specific industries, the trends have been mixed. The metal and automobile industry have shown strong increases, while defense industries such as fast-moving consumer goods and pharmaceuticals have seen profit taking. The broader indices have performed well, with gains ranging between 1% to 2%. So from here, you can also see that sector rotation is quite fast. For example, the automobile sector fell in the previous trading day, but today it is up again. So I want to emphasize to everyone that even though the market has rebounded, the profit effect is still relatively poor. Okay, so let's first take a look at our Nifty 50 index. So this morning, after a stable opening following a brief period of fluctuations and retreat around 10 a.m., it started to rebound all the way up until 2 p.m. in the afternoon before experiencing a slight pullback. Overall, today was a day of fluctuating upward rebound. Now, from a technical perspective, the Nifty 50 index received technical support near the rising trend line below the undercurrent, continuous rebound for 3 days. Now, my personal view leans towards the belief that the strength or sustainability of this rebound may not last long. When engaging in regular stock trading, it's best to opt for a strategy of selling on the rallies. So when we get a good, nice rally, we can sell. Now, why do I have this analysis and judgment? So firstly, from a technical standpoint, the rebound has already lasted for 3 days. In terms of expected time cycles, Fibonacci sequence is highly worth considering, such as numbers like 3, 5, 8. If today is not the top of the rebound, then around Thursday this week will be an important time window because it will be the 3rd day of rebound and the 5th day of rebounds. Now, with a continuous 3-day rebound, today's peak is already close to a 50% of the rebound position, which refers to the rebound range from the high point on May 3rd to the low point of May 13th. So this means Nifty index may encounter technical pressure near the 22,300 area. Similarly, from a financial perspective, in May, the trend continues with FIIs persistently selling and the DIIs persistently buying. So therefore, in May, FII stocks sold stocks worth 29,474.42 crore rupees in the market, while the DIIs collectively bought stocks worth 22,972.75 crore rupees. So we're at about 7,000 crore rupees off. Now this trend may continue, and the surge in India VIX will ensure high volatility. Meanwhile, election trends may become clear before the counting date on June 4th, leading to potentially stronger market reactions. Under these circumstances, we repeatedly suggest that investors in regular stock trading should adopt to a conservative strategy. So we kind of have to adapt. We got to go to a more conservative strategy. Pay attention to risk management and look for suitable opportunities to set on rallies during the market rebound process. So why do I say to look for a suitable opportunities? Because individual stocks are still individual stocks, and indices are still going to be indices. Their trends often do not align. So everyone, do you understand what I mean? Okay, let's get into our Sensex. So regarding the Sensex index, it's more or less the same as the Nifty 50 index. It encountered support near an upward trend line, and then it began to rebound. So looking at the specific details of the rebound, its strength and intensity on the uptrend are slightly weaker than the Nifty 50 index. Although this could be considered negligible, this is because the overall rebound on the Sensex index from the low point is close to a 50% rebound position of the previous decline. From a technical analysis perspective, the 50% to 61% rebound or retracement level is usually relatively crucial. Since it is relatively weak during the rebound, it may lead to a larger decline after the rebound ends in the future. However, this point still needs verification later. For trading, this is not crucial because real trading not only involves observing and analyzing various indices, but it also requires formulating strategies based on specific stock trends and information. So for our Sensex index, we believe that the peak of this rebound may be seen within 2 to 3 trading days. Of course, for these two indices, we're talking about the same market with identical fundamental situations. There may be a seesaw effect between large cap stocks and mid cap stocks in the market, but even if this occurs, by slightly extending the time frame, this noise is all going to be filtered out. So therefore, whether it is the Nifty 50 index or the Sensex index, the approach to strategies will not be much different. So the analysis is going to stop here for our indices. If anyone have further questions, please feel free to message me for consultation after the live stream ends. News time. All right, so just finished the review on the Indian stock market. Hope it was helpful to everybody. So conducting these kind of reviews every night is not to encourage direct copying of what I say, right? It's rather to help everyone learn during this process so that individuals can grow rapidly themselves. In this ever-changing competitive stock market, it is important to establish your own trading system and your own investment style so you can achieve your wealth goals as soon as possible. So next, we're going to be sharing some major news, financial data related to the market. I've shared with everyone this type of content. It may seem ordinary on the surface, and it doesn't seem that important at all. But actually, macroeconomics is very important. Fundamental news or data provides important clues about the economic, the industries, the international financial situations. This is essential for investors to understand the macro and the micro environment of the market. Analyzing fundamental news helps investors grasp the overall market trends and their tendencies, hence enabling them to better formulate investment strategies and decisions. All right, so what do we got first up? So we got retail inflation margins eases to 4.83% in April, but food prices continues to rise. Now, according to the data released by the Indian Ministry of Statistics and the program implementation on May 13th, the overall retail inflation rate in India in April remained at 4.83%. Now, in March, the CPI inflation rate was at 4.83%. Although the inflation rate dropped to an 11-month low in April, it will be the 55th consecutive month above the Reserve Bank of India's 4% midterm target. So target's at 4%. We've been floating at about 4.85%. Now it's at 4.83%. The central bank aims to sustainably bring it down to the target level. Given the persistent food inflation, some economists expect the Reserve Bank of India to continue maintaining its current stance on pausing policy interest rates. In April, the Reserve Bank of India decided for the 7th consecutive time to keep the main lending rate unchanged at 6.5%, with Governor Shaktikanta Das emphasizing that the fluctuations in food inflations are obstacles to sustain deflation processes. Now, according to the central bank's latest forecast, the CPI inflation rate for the fiscal year is expected to be at 4.5%. Indian inflation has stayed within the tolerance range of 4% to 2% points set by the Reserve Bank of India for the 8th consecutive month. Now, this indicates that the central bank may keep the key rates unchanged in the upcoming decision. So everyone, do you know what this all means? It means the hope for Reserve Bank of India to lower interest rates in the shortest possible time to boost the stock market is basically gone, shattered. So there are currently few, if any, potential positive fundamental factors in the market that could have significant impact. Although the rise in the stock market is always driven by capital, without any potential positives, major funds are unlikely to drive stock prices up for no reason. just like the FIIs this month. There's no love without a reason in this world, and there is never any hatred without reason. So, similar to the stock market, there is no rise or fall in the stock market for absolutely no reason. So, any rebound in the market may lack sustained strength, merely driven by technical aspects themselves, and rallies driven by technical factors often have certain limitations. Okay, next up, we got Fed to cut rates in September, say nearly 2/3 of economists. So most of the economists surveyed by Reuters believe the Federal Reserve will cut interest rates twice starting September this year. For the second consecutive month, they have generally raised their expectations for inflation. Although Federal Reserve officials have assured the market that their next move will be a rate cut, the lack of progress is further reducing. So inflation and continuously rising price expectations have raised doubts among some where the Federal Reserve will take action this year. Nearly 2/3 of the surveyed economists, so 70 out of 108, predict that the federal fund rate will be cut for the first time in September by a range of 5% to 5.25%. Now, these results from a survey conducted is from May 7th to May 13th and last month. When surveyed, just over half the participants anticipated a rate cut in September. So please note that this is not market expectations and not Federal Reserve having already decided to start cutting rates. These are all theses. These are all guesses. In general, once the Federal Reserve actually starts cutting rates, it will at least have a positive impact on the stock market, and this impact will continue for a long time. Now, why is that so? Because everyone knows the formulation of adjustment of such monetary policy will last for a long time. For example, once the US starts cutting rates, it will enter a rate cutting cycle. This cycle will not end just after one or two cuts. It is almost impossible to say that this time the Federal Reserve's rate decision is a cut and the next decision will be a hike. So after the formulation and the implementation policies in any country or region cannot change suddenly overnight. Policies need to be continuous and coherent, and this is true for any country. Okay, sorry about that. Just accidentally flipped the screen. So I want to say something to all our members and all our friends here. As you may all know, our wealth growth plan is actually a process of competing for the headquarters in the Asia Pacific region, and it is a complementary plan aimed at helping our members achieve wealth growth. So currently we are in the second phase of competing for the Asia Pacific headquarters, which is more crucial compared to the first phase. Now, why is this so? Because we have entered the Indian market thanks to a vast amount of support from everyone here in the first phase. We've secured victory and we have achieved first place during the votes. So it should be clear that we are a company. And as a company, we need to make profits. Only through continuous and stable profits can we have long-term development, just like trading stocks. However, it is not enough to rely solely on the support of everyone here. We must also translate everyone's support into real cooperation. So we aim to help achieve profits and also enable the company to profit in the Indian market. Our wealth growth plan itself is a win-win plan. And you ask me why? We can gain approval from everyone and establish closer cooperations when we help everyone make profit that other institutions' teams cannot achieve. As the number of members who collaborate with us continues to grow, our company can establish a firm foothold in this fiercely competitive market and strive to be the best. So, is that clear for most of you? This plan is complementary because it helps both of us. All right? Okay. So, in order to ensure the smooth progress of our wealth growth plan, recently we've conducted block deals, block trading, together with everyone here. Now, this is a 100% profitable model. I'm not going to elaborate on its advantages and benefits anymore since everyone has already experienced it and is currently continuing to profit from it. So recently, the stock market environment in India is not very good, with the overall market profitability effect being very poor. However, our block deals have achieved very good performance. On the other hand, we achieved a profit margin of about 30% last week. And since the beginning of this week, which is just 2 trading days ago, we are already at 8% profit. So we basically gained over 10%. Overall, in the term of profit margins, we have already achieved a 48% profit margin. Do you think this performance is satisfactory? So I've always said to everyone that while you may already feel very good about such profit margins or even very satisfied, for me, this is far from enough, especially considering the scarcity of shares. Not everyone has gained such profit margins before, am I right? Don't worry, regarding the issue of purchasing shares, I am in further negotiations with cooperative institutions. We will definitely obtain more and more shares, just like the increased numbers of shares available for purchase today. And haven't many new members already joined in? So I can responsibly just tell everyone that the future will definitely get better and better. I am also in discussions for another aspect of the cooperation. We have already obtained the lowest discount rate. Is there still room for higher profits? Of course, I'm still negotiating with colleagues on these matters. All you need to know is currently solving all our members' issues with purchasing shares is the most crucial thing to me. So please rest assured that things are moving towards an increasingly positive direction. Everyone should listen, follow arrangements, strictly execute trading instructions. This is very vital, and the arrangements that we have made. Thus, in terms of execution, this is something I've always emphasized. Only when everyone's execution improves can I focus more on pursuing projects that will secure a larger profit space for everyone. Okay, so why do we do this? Currently, more and more new as well as old members that are joining us, and we are doing our best to help everyone earn more stable profits. Of course, in this process, some people have doubts about what we are doing. And occasionally, new members ask, why are you bringing us along for such a good thing? Now, it's very normal for people to have these feelings, and I understand this point very well. So first, I want to officially clarify things here once again. So we are currently in the second stage of the competition for the Asia Pacific Regional Headquarters, which is the stage of competing in asset management scale. What are we competing in the stage for? Although it seems like we are competing in the size of asset management scale, we are actually competing in this operational and profit-making capabilities of teams in various regions. How can we expand the asset management scale in our Indian region? There's only 2 ways. So first, we need more and old members to join our cooperative team. We need a larger user base. The second one is, in the shortest time possible, we need to help everyone achieve as much profits as we possibly can. Only when everyone earns more profit will there be more funds in your asset management accounts. Am I right? So if every member earns more profits, then won't the asset management scale in India increase? So have you ever thought about this logic? So second major point is we are a commercial company, an organization that needs to make profits in order to operate. And personally, I have always believed that only cooperation can lead to mutual gains. Only when both parties in a cooperation are profitable Can the cooperation last in the long run? As a commercial company, we cannot provide free services forever. So therefore, in the future, we will be charging a 20% consulting management fee on the profits earned by everyone. A company also needs to survive and operate. So when the company operates well, can we provide more money making projects for everyone? Can you all understand this one point? Thirdly, so as mentioned earlier, the operation of our asset management accounts involves taking over stock shares from other institutions and distributing them to everyone. Of course, everyone also needs to sell according to the requirements. Another reason why we need more user base is that when we sell these shares, we also need to pay attention to risk control. Because if we sell too many stocks at the same time from the same accounts, it can easily cause the market to panic and attract the attention of competitors. Therefore, by selling related stocks with more accounts, we completely eliminate the risk. Of course, in this process, everyone can earn sufficient profits correspondingly, which is an example of a win-win cooperation. Now, I mentioned earlier, there's no love without a reason, and there's no hatred without a reason. So the starting point for our operation is based entirely on the foundation of everyone making profits together. Because I always believe that only cooperation can lead to the mutual gains. And by saying this, you should understand by now. So that is why we do this. Okay, so in regarding to the content that we just discussed, if anyone still has any areas where they are uncertain or they don't understand, feel free to further consult with my assistant. We like transparency, right? So if there's parts that you are still confused about, please reach out. Okay, so next we're going to begin sharing about another great investment master in the world, his life experiences, and how he has achieved these remarkable performances in the market. So he is known as the king of speculation, Soros. Now, of course, in terms of social impact, Soros' reputation is somewhat mixed. In the financial industry, his position can be said to belong to the very few at the top of the pyramid. Even someone who can stand shoulder to shoulder with Buffett, such a master, regardless of others' evaluations, is definitely one of the objects worth serious studying about. So what kind of person is he really? What achievements have he made, and what can we learn from him? So I'm going to give you a little bit of background on who he is. So George Soros, whose original name is Schwarz-Gorgi in Hungarian, is a Hungarian-born American Jewish businessman. So a famous currency speculator, stock investor, progressive political and social activist, philosopher, and philanthropist, using the financial markets to experiment with his philosophical ideas. Now, he is the chairman of the Open Society Foundation and was also a former member of the board of directors of the U.S. House of Representatives Foreign Affairs Committee. In 1930, Soros was born into a Jewish lawyer family in Hungary with the original name Georgi Schwarz. Now, due to the Nazi anti-Semitic issues, Soros' childhood and adolescence were lived under the shadows of death. So, from before World War II to during the war, the Hungarian government was a loyal follower of the German Nazis, and the anti-Semitism was very serious. Nearly 500,000 Hungarian Jews were sent to concentration camps for slaughter. It was only through the shrewdness and the strength of his father, along with the help of good-hearted people, that Soros' family escaped the Nazi slaughter and fortunately survived until liberation of Europe. Now, as an adult, Soros said, "I am very fortunate to have such a father. If I had acted according to the normal rules, I would undoubtedly have died that year." Now, many Jews did not take evasive action, but my family did. So, what I learned from the war is that sometimes, if you do not take risks, you may lose everything, even your own life. So, for more than a decade, facing the threat of death, this had a profound impact on Soros' life beliefs as he learned survival skills from life and death crisis. At the age of 17, Soros immigrated to the United Kingdom with his family. In his historical financial center, he realized the power of money. Because of this impoverished family's background, Soros had to rely on odd jobs to make a living, and he made a solemn vow. I was born with nothing, but I shall not die with nothing. So, how much wealth does George Soros have now? So, as of 2023, Soros Fund Management manages $250 billion in asset, and his personal fortune has reached $8.6 billion. That's a lot of money. So, he came from nothing, he struggled with war, and he can still make it. Now, before we continue researching and learning, I want to share 3 short stories. These are kind of quick, these are kind of fun. So, hang back, relax, and I'm going to do some storytelling, which we will go back to George Soros later on. So, the first short story is at a wedding, right? So, in 1983, at a church in Southampton, Long Island, New York, a wedding was taking place. Now, facing the bride in her wedding gown, the priest began to ask the groom in a procedural manner, "Are you willing to share all your possessions with your wife?" So, silence filled the room. The priest was puzzled. The bride's face changed drastically, and murmurs began in the audience. Now, at that moment, a lawyer rushed forward and whispered to the man, "It's okay. Such a promise has no legal effect. It is not legal binding." The man understood, nodded, and then the wedding proceeded as usual. So, did you guys catch the message within that? So, when I first heard this story, my initial feeling was that the male protagonist, the groom, in the story must have had deep-rooted attitude towards money, where nothing is more important to him than what he owns. So that's why when he had to share it all, he kept quiet. He thought it was legal binding. He thought he was about to give up half his stuff. Now, in my own understanding, only when one's knowledge or obsession be achieved in that aspect, that extreme aspect, that's how we get significant success. Now, of course, I may not be using all the exact precise terms, but as long as you can understand my meaning, then we're okay, right? So only the persistent ones that are obsessed with one specific things are likely to succeed. So that's the first story. But a groom and a bride, kind of funny. Okay. Second story. So another story in the Southampton town on Long Island, New York. A man went to his neighbor's house to confide his misfortunes, and the neighbor patiently listened. It turned out the man's son had failed an investment, incurred a huge debt, so the man left all his savings to his son. Unexpectedly, the son invested again and once again failed miserably, accumulating even more debt. The enormous debt not only left the son with nowhere to turn, but left the man himself with no way out either. Now, seeing this man's desolate state and the absent-minded behavior, the neighbor clearly felt that he had mental issues and might choose a path of no return. However, he only offered comfort without providing any substantial help. Now, this is despite that the neighbor is very wealthy himself, okay? He's very rich. The man returned home and committed suicide the next day. The neighbor was chatting with a friend and mentioned that the man who had committed suicide, the friend immediately jumped up and said, "You're so wealthy, and you clearly sensed that he was going to commit suicide. How could you stand by and do nothing to save him? You're so cruel. So the neighbor just replied, this is not a matter of saving or not saving. When a person does something wrong, they should bear the responsibility themselves. It's his own life. If he chooses to commit suicide, it's up to him to decide, and others cannot help him. So, a neighbor here's his other neighbor is about to commit suicide, like feels that he's going to go commit suicide, and he doesn't offer help, even though he's so wealthy himself. So I want to ask you, do you think this is very cold-hearted? This is an extreme kind of rationality, or it may be seeing the essence of things very clearly, even reaching a level of cold-hearted rationality, right? So some people would help, some people won't. What makes sense? Okay, last story. So in 1988, a Western financial giant went to Beijing, China. The country's leader met with him and said that he had met several American economists who all advised China to fully develop a market economy in its economic reforms. They suggested that the country should refrain from administrative intervention and allow the market to develop freely, as an invisible hand would naturally regulate the market. The financial giant said there is no such thing as an invisible hand in the world. It is everyone's bias that guides the market. When the market faces issues, government intervention is not only important, but it is necessary. So, this story sounds kind of meaningless. I kind of get it, but it's actually very important, and we're going to discuss this a little bit later on. So, by now, I don't know if how many of you guys guessed, but the person, the protagonist in all these stories, the neighbor, the groom, the person who went to China, all three of these stories is the same person. It is actually George Soros. So, are we going to study these three stories about Soros tonight? No, probably not. My main goal is to help everyone better understand Soros as a person. So, whether it's Buffett or Soros, they both have unknown sides. So when we study the ideas, the strategies, and the methods of these masters in the future, we need to pay attention to their thinking and their learning. So where do we start learning about Soros? Let me give you guys an idea about his book. So George Soros, this financial genius, can be called one of the most powerful and profitable investors in the world currently. His book, Alchemy of Finance, is considered by the public as an investment guide. Now, Alchemy of Finance is another timeless investment guide after reminiscences of a stock operator. Soros is not only a financier, but a philosopher. His work, Alchemy of Finance, is filled with philosophical viewpoints and is considered an investment guided by the public. Now, the financial storm that started in the Southeast Asia in 1997 made this international financial speculator a temporary celebrity. And his works and theories received widespread attention all at once. So studying Soros has become a pursuit and a dream for many. Soros' years of investment experience are fully displayed in his representative work on the alchemy of finance. Now, this is a classic work in the capital markets. Not only a must-have book for investors, but also the protagonist of the legendary Huludao is admired and praised by the investors. Now, of course, although this book is a classic, it requires serious study. After all, the book leans more towards a philosophical way of expression, and many people may not be able to grasp the specific insights, even after reading it once or twice. But I can tell you clearly, if you can further understand and learn the main thoughts and repairs in it, I believe it will bring you a lot of help. Okay, so in regards to the stories that we talked about, I wonder if any of you have any special feeling towards this guy, or did you notice or hear something special? You know, Personally, my feelings is, why can't ordinary people achieve great success? What are the differences between those successful individuals and us? So first, having a strong desire for wealth or money is one of the important prerequisites for success. Although it is not only the only factor, but it is also often important. Looking at Soros, the emphasis he places on wealth or money to the extent, even at his wedding, the ceremony almost couldn't proceed smoothly. Is this something anyone can achieve? So ask yourself honestly, can you do it at your wedding day? So let's not talk about Soros for now. So if you have a strong desire for wealth or money, then do you have enough ambition for the wealth growth plan we are currently pursuing? Have you thought about leveraging the profit growth plan to achieve your financial goals? Having enough rationality, basing all judgments and decisions on reason and not emotions. This can be understood from the second story. So some so-called noble people might raise moral objections to this, but in fact, it is completely unnecessary to consider. Duty is one thing, responsibility is another. Having compassion is one thing, but it's another thing altogether. From an economic point of view, does the market really have an invisible hand? Those of you present here are probably not economists, including myself, of course. So I tend to agree with Soros' view that the visible hand in the market carries more power. So let's focus on stocks, for instance. Which stock is not artificially driven upwards? Is this a visible hand or an invisible hand? Market trends are mostly driven by large institutions and funds behind the scenes. It's just that for the average investor, they cannot see the visible hand at play. You might not have much insight into this area. If we want to profit quickly and steadily in the market through block trades, as we did recently, do you believe we have to align with the institutions? So think about this question. The book of Alchemy of Finance mentioned earlier may be a bit bitter and difficult to understand, but to make it easier for everyone to understand, in our next live broadcast, we will introduce Soros' most famous financial battles, as well as some of his important trading principles and the related contents to those things. So we're not going to be going over that today. So let's be moving on. All right. So last topic of the evening, our stock analysis. So we're going to start tracking and analyzing the stocks that we have recommended to everyone before. Now, in the last 3 trading days, the market has experienced an overall rebound. And most of the stocks we previously recommended have also rebounded. This is also a very, very good thing that most of us here are that held for the stock. Now, we have always told everyone that as long as it is a stock that we have recommended, we will always track it throughout and take responsibility until the very, very end. Whether it falls or rebounds, we will continue to track it so everyone can rest assured about this when we ask you to purchase or sell stocks. Now, for all these stocks recommended to everyone, regardless of the final profit or loss situation, if there is indeed a loss, I will help everyone quickly earn it back through the wealth growth plan. So even now, actually, recently, through block deals, it has been quite good compared to regular stock trading. So there is absolutely nothing to worry about. Just patiently wait for our trading instructions. Okay, so without further delay, let's jump into some stock reviews. Okay, first one, LT. Today, the stock has experienced a significant rebound, with the strength and magnitude of the rebound far exceeding the trend of the index. Now, it is expected to rise to around 3,435 tomorrow, so 3,435. How long can the strength and intensity of such rebounds like today's last? As we mentioned earlier, for some high quality stocks, they may adjust along with the market adjustment. But once the market starts to rebound, they may also lead the overall market in the rebound trend. Now, of course, as for the stock LT, whether the final rebound strength can surpass the index and the overall market, we will have to wait and see. But what can be confirmed is that the stock has found support from the low point in February of this year. The road to rebound can only be taken step by step. So for this stock, I still advise everyone, we got to continue to hold. Even if you want to sell, we would not recommend selling during this strong rebound. From a strategic point of view, we can only wait for an opportunity of rebound stagnation, and then we can sell, right? So hang on to it, and we'll come back to this. Next stock, NCC. All right, so let's take a look at NCC. So when it comes to this stock, I don't think there's much to say. The rebound today is close to 6%. Now, which can be considered a very, very strong rebound. Now, looking at this magnitude of rebound, it is likely that tomorrow will break through the resistant range of 253 to 256. So truly, I believe this is going to break the resistance tomorrow. So you may notice a detail that today's strong rebound is based on the foundation of the previous two candlestick patterns of bottoming and rebounding. Patterns like this, based on experience, should be studied attentively in daily life. And of course, distinctions should be made. Specific situations need specific analysis. The trend of the stock remains positive. The stock have always been a good one. I've always said this is a long-term bullish stock. So from a technical perspective, the bullish trend is also being maintained very well. Even though it has corrected along the market this time, it has not broken the uptrend line. So it is recommended to continue holding on to this one as well. And if selling is needed in the future, as I always said, I will be notifying you when to sell. Right? So not much more to say about the stock. So LT, NCC, let's hang tight a little bit longer. We're on a good rebound upwards, right? All right, last analysis that we are going to do is going to be the stock JK Paper again. Now, compared to the strong rebound of the previous two stocks, this stock did not show much performance today. Basically unchanged from the previous trading day. But the good news is the previous trading day was also a candlestick chart showing a bottom exploration rebound. But it did not play out today. So the stock clearly found support near the low level point of April 19th. Everyone knows that not every stock trend is close to the overall market. When a rebound is needed, stocks can lead the market index or it might lag behind it. So there's no need to worry about the stock. We're going to continue to observe this one. Now, for some of you that don't know a little bit of background about JK Paper, this is a pulp and paper company. They do manufacturing. They do sales of branded paper, cultural paper. We do packaging, paper boards, all internationally. So it belongs to a traditional industry and it's not one of those high-tech companies, right? Now, everything about this company in the past has very strong holdings, right? So they got great performance. The price has gone over a significant adjustment period already. The valuation is relatively ideal. So I don't see a problem in us holding the stock, right? So that wraps up our stock analysis. But the LT and NCC is currently going through a strong rebound phase now. So, we were super patient waiting for it to go down. So why not patiently wait for it to rise back up? Don't worry. If it's ever time to sell, you will all be notified as soon as possible. So lots of great news with our two indices. Kind of excited for the next class. So that is going to wrap up our evening tonight. So if you have any questions, feel free to message me and we can always discuss or consult. Go over the contents. So we learned about Buffett. Now we're learning about George Soros. Lots of insights we can learn from these masters in our lifetime, right? And then you can do it too, and then apply it to your real life trading strategies. Our next online live broadcast is scheduled for Thursday, May 16th at 8 p.m. So I hope to see everyone here again. Thank you very much to all my members and friends for their support. And I'll see you all again next time.